What's going on, everyone? Welcome to another video. In today's video, I'm going to be showing you how I personally find the daily bias using candlestick patterns on the daily time frame. You will see that these patterns are very powerful, and these will definitely make it very clear to you to find most of the time the right direction for the day and also avoid you on many potential losses. So before we get into the charts and show you all the examples, let me just cover a few points on the slides. So point number one is understanding how the previous daily candles form are very essential in being able to see where the market might be headed the following day. And this can also apply for the weekly time frame, by the way, but we'll just focus mostly on the daily now. So a simple rule that you can apply that will keep you out of many losses is basically just following the previous day direction for your trades, unless obviously the previous day's high or low are taken out, which just means that you have to be more cautious because there could be a reversal. Now, the main candles that I look for are engulfs, inside bars, liquidity wicks, inside candles. But apart from these patterns, you also need to keep into consideration where they are forming, right? Are they forming at support resistance or supply and demand levels, or are there any fair value gaps areas, or did they sweep any major highs or lows? Okay, so apart from all these patterns, which we'll cover now in the next slide, you really need to look at where they form. Okay, what's the location of the market? So these are the candlestick patterns that I look for. You see, we have an engulf, obviously just simple bullish engulf, bearish engulf. Inside bars are basically just candles. This is a bullish one, this is a bearish one, where you can see this manipulated, this swept the previous candle low, closed bullish but closed inside, right? So it's not an engulf, it's an inside bar. This obviously can have different names. I just call it an inside bar. And this would be a bearish inside bar where it took out the previous candle high and it closed back inside. Then we have liquidity wicks, which is basically a formation of two candles of the same color, right? So this is a bullish liquidity wick. This would be a bearish one. This would be where this candle takes out the previous candle low, as you can see, but ended up bullish. So this is obviously a sign as of very strong bullishness, because this candle at one point was extremely bearish, right? It was a bearish engulf, then completely reversed and ended up being bullish. Same thing goes for the bearish one. At a certain point, this candle was all the way at the top here, which was obviously a bullish engulf at the time, and it just completely reversed and ended up bearish with this previous candle high being swept. Okay, and then an inside day would just be a candle where it didn't take out the previous candle high or low. It's not an engulf, right? It's just an inside day. Obviously, these are from the two same colors, the same direction. This would be, it's almost an engulf, but it's not, right? It's still close inside of the previous day's range, and it didn't take out the previous day high, neither the low. So, with these candlestick patterns, with these inside days, what usually happens is that the next day, 99% of the time, either the high or the low will be taken out. I don't think I've pretty much never seen two inside days in a row. Like it could happen, but it's very rare, right? So now we've covered all these different candlestick patterns that we need to look out for. Let's head to the charts and actually just analyze and see how they form and how they react and how you can use this to your advantage, right? So just by looking now at recent price action, obviously we had this massive gap up, which makes it a little bit, not so clean price action right here because of this gap. But you can see that, for example, yesterday we had an inside day, and today obviously it took out, well, in this case, the low, right? So let's just go back and analyze pretty much candle by candle. So you can see that, let's start from some time ago. You can see, for example, here, this is an example that I really wanted to cover. So we have this bullish candle, right? A bullish inside bar. As you can see, it swept this previous candle low, and it's not an engulf. It closed inside of this candle's range, right? So the next day we can pretty much expect to have a bullish day, and as you can see, it was a very strong bullish day. So if you just focus on these candlestick patterns and focusing on following the previous day direction, you can probably save yourself on losses if you're trying to short here in this day. So you can just mainly focus on buys. Then what happens the next day? Where does this candle also end up in? It ends up in this range right here, right? The supply. So there is a potential for a reversal, right? We have to keep that in mind. It's not to say that every supply obviously will get respected, but obviously the higher the time frame, the supply, well, the stronger it is. But anyways, we're on the daily now. You can see there was a lot of consolidation and a massive drop here. We came into this supply, but then the next day which technically, if you just follow the rule of the previous day's direction, if you want to trade with that one, then you still have to look at what happens in this candle. So if this candle is forming and it already took out this previous candle high, as you can see right here, it did take out the high, right? We have to keep that in mind because we're out of supply. It took out the previous day's high, and we can expect a reversal, and this is what happened. It ended up a bearish day, not a very strong one, but it's still a bearish day. It's an inside bar, right? It swept the previous day's high and ended up bearish, right? It's not an engulf, it closed inside the previous day range. Now the next day, since this candle formed in a supply, it's very high probability that the next day will actually be a bearish day. And as you can see, we made a nice wick to the top. We didn't take out the previous day high. I had a nice bearish day, going all the way down here. And then yes, we did reverse a little bit. Now, what to keep in mind after this candle, okay? Because since we're reacting from a supply, we still have to look at other possibilities. So are there any demands or support levels or fair value gaps that could make price reverse? And as you can see, we had a daily fair value gap right here. And guys, I don't trade fair value gaps. I just use them on the daily time frame to see for context, for potential reversals. I don't use them in my scalping or for entries. I don't use that at all. Most of you already know that I mostly use order flow tools as Bookmap. But anyways, for the daily time frame, this is actually quite helpful to see potential reversal points. And as you can see right here, this candle closed inside of this fair value gap, even though it went all the way down here, closed back inside. And then the next day, you could expect a reversal. So the next day, this one could be a little bit of a 50-50 one. You could find the short, but you could also find the long. And, the best one will just play out. So after this candle, since we reacted from this fair value gap, we're coming back into the supply, but the supply is not really showing much strength since it's reacting from this fair value gap. Okay, and it's coming back into the supply. So the next day you can still look at longs, and as you can see, it was a very bullish day, obviously. And the next day, since we're at all-time highs, there's really nothing stopping price from going further down. So you might as well just keep looking for longs, and you can look for longs in this one. And the next day you can look for longs again here, and then look again what happened here, right? It took out the previous day's high again, and then you need to see at the timings as well. Does this happen? When does it take out the previous day high, right? Is it during pre-market and it's already going downwards before the market actually opens, or is it when the market opens, then it just goes all the way up and then takes it out? You need to look at the timing as well, because this could influence the direction of the day as well. So after this high is being set right here of this bearish inside bar, as you can see, it took out the previous day high, closed bearish. Again, we can expect the next day to be bearish. And what happened again? Massive bearish day on the next day, even taking out the previous day high, right? Again, we don't know what time this happened, but we still would need to look. Did it happen during pre-market? Did it happen during market open? So you have this massive sell-off after just this simple bearish IB, where it also swept the previous day's high. Now the next day, since we should be looking for sells again, what do we see? Again, a bullish inside bar where it took out the previous day's low. Now, again, this is very important to see when exactly it happened. I'm going to keep saying this because it's just so crucial. Did it happen in the pre-market? Maybe the market opened here, right? The day opened here on Friday. Maybe it went all the way down in the pre-market. Maybe it swept the previous day low and it went all the way back up. And maybe at the time the market opened, the daily candle was maybe already bullish. I don't know by memory now. Okay, but this is something you need to look at. And when exactly did it take out? And the next day, obviously, because of this bullish inside bar made in this gap, okay, we could expect the next day to be bullish. And as you can see, the next day was bullish, not a very strong one. There were opportunities on both sides, on both short and longs. So you can still, if you focus just on buys, because the previous day was bullish, you could have found a nice very trade was right here at the bottom. Okay, so then this candle ended up being a inside day. This just means that either the high or the low will be taken out. And today was a bit of a tricky one, since as the market opened right here during the pre-market, there was a massive sell-off already. Okay, so it's very unlikely that this candle will end up bullish, because it was just a huge sell-off. And as you can see, from all the way to the top to the bottom, it was a very big move of almost 100 points. So yeah, it was very aggressive and a tricky day to be trading. So where is it coming in now? And it's again coming into this gap right here. Obviously, it's a bit tricky to draw this now because of this gap. But if you look on a forex chart on the S&P 500, it might be just cleaner to look at the fair value gaps, right? But it could be rejecting from a potential gap that we have here, maybe on a normal forex chart. So this just means that we could still have a reversal tomorrow, okay? And I'm just trying to explain to you guys everything that comes into my mind, but it just happens all the time. Here, for example, and of course, nothing is 100%, right? And I'm just showing you what most of the time works. As you can see how many times the S&P has these runs of same direction candles on the daily time frame. This happens all the time. Here there's a slight sweep of the high by the tick, ended up bearish, ended up as an engulf. You can be looking to short here, you could be looking to short here, and until this daily demand, okay? Because then from this daily demand again, you can expect a reversal. The next day is bullish. Since this day is bullish, there's not really any fair value gaps here or any supply on the daily time frame, so you can just keep focusing on buys. And as you can see, after this candle, you can just try to buy here, try to buy here, try to buy here, try to buy here, even try to buy here. And then after this candle, since it ended up as a bearish inside bar, took out the previous day high, you could look for sells. It wouldn't have worked out. Here you made a little engulf. You could be looking for buys, but then this candle swept the previous day's high, so you can expect a reversal. This happened, but then it came into this small daily demand, right? So you can expect a reversal again, and the next day was strongly bullish. And then the next day, which you'd be looking to buy on this candle right here, right? On this candle, you would be looking to buy because of this bullish engulf reacting from a daily demand. But then again, it took out the previous day's high, right? So again, you can expect a reversal. But obviously, there are times where there's nothing really stopping price from reversing because there's probably no supply, or there's no resistance, or there's no fair value gaps, and that's why all of a sudden we have these massive runs on the S&P, mostly to the upside, sometimes obviously to the downside, but generally we all know that it's quite bullish asset to be trading. As you can see, this happens just all the time, where especially if we're at all-time highs like here, for example, here we broke this high and we're just again bullish for a couple of days, with some bearish days here and there and some continuations, not too many. But it's all just about looking at these patterns and seeing where they form as well, and then looking if the previous day high or low is taken out, and when exactly is it taken out. Is it during pre-market or during market opens? These are all very important keys. So there are three main points to look for, which is the candlestick pattern itself, the location of it, and then third and lastly is the sweeps of the highs or the lows of the previous day, because they can cause major reversals, right? And can put you off of your original bias for the day if you're just focusing on following the previous day's direction. But as you can see, generally this can save you out on a lot of losses, especially these massive runs that the S&P sometimes does of just bullishness up, and you can just keep focusing on buys and just completely milk the market on just focusing on these buys, and only try to sell when you see a proper candlestick pattern at a certain good location. Okay, so it's really important to analyze the daily time frame properly, and sometimes the buys will not be clear, right? I had to be honest today. I didn't have not a clear buy for today, because this candle obviously was an inside candle. We had a massive sell-off already. So, this could be just a maybe potential sweep and then reverse. So it was not clear for me today at all. So then it's really important to try and sit on your hands and just play off the most obvious and the strongest levels possible, and not force any trades. Okay. So yeah, that's pretty much it, guys. I hope this video was helpful. If it was, drop a like, and if you have any questions, just let me know in the comments down below. I'll be more than glad to help you guys out. All right. So thank you for watching, and we'll see you in the next video.